We have Luke Gromen, the founder, the president of FFTT LLC, joining us. Welcome, Luke. U.S.-China relations are one of the things that we've been reporting about quite often, it seems like recently. A little bit of back and forth was going on. Now it just seems like the U.S. coming one sort of restriction, sanction after another. Are you concerned, Luke? And I guess I wonder, should we be?
Yeah, thanks again for having me on, Ben. It's something I'm watching closely. It's something we have been watching closely for several months now. And really, obviously, the trade war, trade discussions, however you want to phrase it, have been building over the last couple of years. Back in May, the White House put out a document in which it outlined the new terms of engagement with China, and what they used was the phrase great power competition and compared it again to what we saw in the Cold War with the Soviet Union. And so I thought that was a very important document. One of my best relationships on Wall Street called it, said to me, this reads like a war scroll. And so it's been interesting to me to see exactly what you referred to, Ben, which is the ramp up in rhetoric and sanctions, et cetera, ever since that late May document was released. In terms of how concerned I am, I'm getting a bit more concerned, and from two fronts. Number one, I think some of these are things that needed to happen to even out the playing field. However, there seems to me to be a fair bit of complacency about exactly how many cards the U.S. has and exactly how few cards China has. And so I do think the U.S. has more cards than China, but to me, there seems to be a high degree of complacency about that China has no cards at all to play. And I don't think that's right. And so I've been sort of waiting in recent weeks for the shoe to drop in terms of what China does if we push this too far in their eyes. And there's a number of things they could conceivably do when you start taking a look at the percentage of economic activity and sales a number of very high-profile U.S. companies do in China.
Yeah, in terms of playing their hand or us playing ours, it was an interesting game even before that wild card got thrown onto the table there, and it'll be interesting to see how it plays out here. Speaking of a wild card, one of the things we've also been keeping an eye on, Luke, I'm curious how much you're watching, I imagine you are, is Asia, European data, international data relative to U.S. data. It seems like over the last week or so, basically since that, jobless claims, you could say below 1 million. Then we had the Friday unemployment number, it seemed like, which came in better than expected. A week or so ago that was. Let's talk a little bit about how it seems like U.S. data is now kind of beating. It seems like Asia data seems to be lagging. I reported this morning, third consecutive quarterly decline in terms of Japanese GDP. It contracted by 27.8%.
Yeah, it's definitely been noticeable, and I thought it's been interesting. I think it'll be interesting to see the level, given that we're still in this political discussion here domestically about ongoing stimulus and what will happen, I think is going to be key in terms of maintaining some level of premium in terms of U.S. economic activity over the rest of the world. And every day that goes on that we don't have something, I suspect that will unfortunately fall back down towards the rest of the world rather than continue that lead. And with U.S. rates doing what they're doing too, I think is also something that as we look forward, there's a lot of supply coming in terms of Treasury auctions, and we've seen already the long end of the curve start to back up on that. With the Fed only buying what they're buying, the question then becomes what's the level of rates that starts to become a problem for the U.S. as well. So I have noticed the gap, the premium in the U.S. versus rest of the world in recent weeks, in the last couple months. But I'm a little concerned given those two factors, both on the stimulus side and then what we're seeing with rates as a result of the size of these U.S. auctions, U.S. maybe trying to term out some of that debt. And where that will start to hit rates, or that will take rates to a level that will start to impact the real economy a little bit more.
Yeah, it'll be interesting to see if the Dow can get back up above this week, that 26,000 level again, and 28,000 level, and hold up above in terms of key levels, especially as you mentioned with stimulus lagging, and again 28,000 with stimulus lagging, and some of these numbers to come here. Let's talk a little bit about some of these numbers to come. I mentioned at the top of the show, Luke, some economic data here in the U.S. We've got earnings. We've got the FOMC. I guess my question is, what are you dialed in on this week, and what do you think we should be?
I think the thing that's probably in an otherwise relatively slow time of the year, that I think it'll be very interesting to read what the Fed was thinking in the meeting minutes and looking for more hints in terms of how far they are from doing things like explicit yield curve control,
okay.
Particularly as it relates to the backup in yields we saw last week that caused a little bit of disruption in a couple different markets. That's something I will be looking for hints from in terms of if the goalposts have changed in terms of what they need to see before they begin to reaccelerate balance sheet growth or to implement yield curve control. Just any sort of language on that front, or if they're still a long way from that point, or if they start to downplay it, then I think it will be. I think that'll be an important signpost as well. Like I said, vis-a-vis this Treasury issuance that is continuing to be pretty big.
Yeah, now that I think of it, as you mentioned that, we were talking last week about, well, you and I were just talking a minute ago about how some of that economic data, those beats have shifted back to the U.S. It's interesting because the U.S., our balance sheet has been shrinking, yet the EU has been expanding for many weeks now. Let's talk a little bit about crude. Let's talk about copper, because this is all kind of tied into the U.S.-China discussion. It's tied into the demand discussion, the reemergence, getting back off a lockdown type situation and back to work. They're a major force, basically. They are in terms of price activity, and they gave us a pretty good indication of what's playing out. We're looking at an intraday chart here. Crude's coming off a little bit right now, but it's been mostly sideways. Copper lost some of its momentum to the upside. I guess kind of tying it back to our initial discussions, U.S.-China trade relations, kind of the bigger picture in terms of the pandemic, Luke. What are these two commodities kind of stalling out at this point telling you as far as, again, the bigger picture?
The oil in particular, I think is you obviously had this huge rally back from whatever it was at the lows. I mean, I guess at one point it was negative for a day or two or for a few hours, but it crashed with the COVID crisis and shut down and bounced back. With that, it's been interesting to me. You came out and you had this deal in April with OPEC and Russia, and Putin picked a number, and he said I think 42 is a good number for oil. And at the time, I forget where oil was. I want to say it was 22 or 25. It was much lower. And to us, it just seemed like a very specific number. Yet here we are a few months later, and oil's 42, and volatility's been tamped down, and it's kind of flattened out. And you saw Russia float a trial balloon maybe a week or two ago, maybe it was 3 weeks ago, about Putin putting on, or Russia putting on Mexico-style hedges at around these price levels. So to me, it seems like one of the big swing producers, being Russia, wanted it at 42 as part of this deal. Just by, and 42 is an interesting number. It just happens to be the price at which most of shale is economic. And so to me, it seems like we've sort of the easy money's been made in oil, and that it's now at the price range that was discussed at this OPEC plus deal back in April. And to us, Russia's actions, or the talk of floating of this idea of them hedging out at 42, suggests that maybe they don't think it's going to rise a whole lot more, or that whatever's been discussed is that beyond here, the discipline from the producers might not be as great, and that basically we're at sort of a ceiling there. Copper, I think, has been interesting, and obviously the rally we've had. The housing data here in the U.S. continues to be pretty good, and obviously that's a big usage of copper. But in terms of how it relates to China, I just think it's more an economic trade at this point. So again, we've had this big rally, and so from here we'll have to see where it goes. I'm a little skeptical at this point, just given the intensification of some of the trade, tensions, I guess, if you will. in terms of do we get another leg higher without the Fed, without U.S. Congress doing some more on the fiscal side.
Yeah, you're not alone, Luke. While copper closed positive last week, 4 weeks lower into it. So definitely slowing after it failed right around that $3 level. We'll continue to watch these top stories, Luke, and some of these markets, energy markets, crude, copper as well, direct reflection of these relationships that we share here with other countries and certainly some of the economic data that plays out here. Luke, really appreciate you joining us. Thanks for giving us part of your Monday morning. Ladies and gentlemen, Luke Gromen's the founder. He's the president of FFTT LLC.